Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you. And should I make the same dialogue I made last week as well? Wearing red and market surely not very happy. Quite subdued in trade. 19,500 hit below that as well, Nifty, and then recovered a slight bit, but still a dull session.
Absolutely, Vinny. I rightly said dull session coming in for the markets. We did slip the 19,500 mark as well on an intraday basis, but from there on we've actually tried to recover from the day's lowest point. As you can see on your screen right now, we were trading with cuts of about 0.5% or so when it comes to the benchmark indices. Let's take a look at what Nifty Bank is doing, because that one was moving in tandem with the benchmark indices. If you look at Nifty Bank as well, that one also was trading with declines of about 0.6% right now. Also, you have downtick as much as 0.6% coming in for Nifty Bank. Let's take a look at what the broader markets are doing, because they are holding the fort pretty strong and firm in today's trading session. Take a look at small cap index is trading with gains of about 0.6%. In fact, it is outperforming the benchmark indices. Both the broader markets are outperforming the benchmark indices in today's trading session. Let's take a deeper dive and let's take a look at what are the other sectoral indices doing at this point in time. Remember that you've seen some sort of a shade of green coming for PSU Bank Index, 0.7% uptick coming in for the PSU Bank Index. Safely to say that you have the PSU banks that are actually outperforming their private banking peers right now. You saw it on your screen. You saw a steady recovery coming for the IT Index right now, trading with trading flat with a positive bias. You also have Media Index that's holding gains of about 1.6%, 1.2% as we speak. On the flip side is the energy and the auto sector that's taking a knock out to the list, as well as Metal Index is trading pretty weak in today's trading session. So that's the way how the markets are looking like at this point in time, Vinny. Yes, benchmarks are pretty much subdued in trade, but you have broader markets that are seeing good recovery.
Okay, broader markets are seeing good recovery. Benchmarks a bit subdued in trade. But on that note, let's get started with the individual stock movers in trade, either on the back of news flows or on the back of technicals. On the technicals, we have Kunal Bothra joining in with us, while from our research team, we have Lisa as well as Vamakshi joining in with us. A good afternoon to all three of y'all as well. And I'll talk about the first stock that is in focus, and that is Marico today. Look at the up move that we saw, 5% uptick intraday, what we saw coming in for Marico. And this was mainly, we saw a brokerage note, that couple of brokerage notes actually. But one is from ICICI Securities, where they have actually upgraded the stock to a buy from a previous ad rating. Now, what they're highlighting in their brokerage note, that when they met with the management, they what Marico highlighted and what they expect is that Marico in the medium term, the volume growth, they have an aspiration to maintain at around 8% volume growth. For the edible oil business, that's Saffola, they expect to hold the threshold margins while maintaining a stable revenue growth as well, stable growth there. And revenue growth even for the food segment is expected to be more than the edible oil business over the medium term. And the D2C business, they will start seeing a lot of synergies coming in on this front as well, a lot of acquisitions they've made. So how that pans out will be interesting. They expect that also to do well going forward. Other than that, JP Morgan too is maintaining an overweight rating on Marico, given a target price of 615. Improving the demand and margin narrative is what they believe could work out for Marico, as well as they expect new businesses to do well, and that will contribute to around 20% of the business in FY24. And let's look at the stock, because that's intraday actually managed to hit 23-month high as well. So on the back of an upgrade that has come in from ICICI Securities and JP Morgan maintaining an overweight rating, the stock is buzzing in trade.
All right, that's Marico for you, but let's shift focus from the consumption theme to the defense, rather the railway pack then. And Kunal, IRCTC, how is this one looking on the charts to you right now?
So excellent momentum for the stock today. Managed to break out, I think, after a swing of almost 2 or 3 weeks for the stock trading into a downward trend. This is a swing breakout for the IRCTC, the stock crossing above the 700 mark on the spot levels and showing good volumes on the daily chart so far. This indicates that this could probably be a sort of a near-term bottom for IRCTC. Now, the previous base for the stock was around 665 mark. That was, I think, hit a couple of weeks back for IRCTC. That should now be a strong support or a stop loss for this trade. And on the upside, we could be looking at the retest of the previous highs, which was around 750, 760 for IRCTC. So a further gain of at least another 7% to 8% is what I would expect for IRCTC, and 665 could be a trading stop loss for this trade.
All right, additional 7 to 8% upside is what Kunal is envisaging for IRCTC. But let's stay with the railway theme then, and let's talk about Rail Vikas Nigam Limited, or RVNL as we know it, and that particular counter is a buzz in today's trading session. That's because the company has informed the bourses that they are emerged as the lowest bidder. There's L1 for a project worth about 1,098 crore rupees. On back of that, you can see the stock is actually gaining for a second consecutive session in today's trading session. 2.2% uptick coming in for RVNL. At one point in time, the stock was trading higher in excess of about 4% also. So keep this one also on your radar along with the rest of the other railway names.
Let's move on to the next one. And Kunal, you picked up Biocon for the pharma space. When you look at this one, had not done anything for the longest period of time. In the last 6 months, we have seen a good up move coming in and a good recovery that has come in the stock from 199 today trading at 274. How is it looking like Biocon? Still an attractive buy?
I think it's a very attractive buy. So, we've seen many of the pharma stocks one by one, stage by stage, showing signs of a breakout. It started off with the mid-cap pharma names, now trickled to the larger cap ones, and especially the underperforming names, the likes of Biocon. Now, the stock had been beaten down significantly. I think the all-time high levels for Biocon was just around that 500 mark, 485, 500 levels for the stock. It had fallen down to as much as I think 190, which means a correction of more than 50% for the stock in the last 2 to 3 years. It's now showing signs of very good recovery. Now, in this leg of recovery, the stock has broken past above its 200 DMA. It's also shown signs of a golden crossover where the 50 DMA has crossed about the 200-day moving average. Now, and the chart structure has been a little bit of more constant as well as gradual, for the stock price uptrend, which means that this should be a lasting recovery for a stock like Biocon. Looks attractive and would look out for the stock heading towards the next psychological break of 300 levels.
Alright, moving on, Vamakshi, let's talk about the newsmaker of the day, and that definitely has to be Vedanta. We know that you had a big announcement that came post market hours on Friday. If you could tell us what it was.
Well, yes, Cheryl, you're absolutely right. It is a big mover for the day, and the announcement that actually came in on Friday goes as follows: that the company has announced the demerger of its diversified businesses, and it has they're in turn aiming to unlock significant value as well as attract big ticket investments. They have highlighted that the model will result in 6 separate listed entities, and in fact this demerger is planned to be a simple vertical split. Now, what does that mean? That means that for one share of Vedanta Limited, the shareholders will additionally receive 1 share of each of the 5 newly listed companies. Apart from that, we also have a brokerage note that came in from CLS on the same, and they believe that operationally nothing much is expected to change for Vedanta on account of this demerger, but the move will enable the parent to bring in strategic investors into these entities, and hence the pressure that is being seen on the debt is expected to ease. They have also noted that the stock did see a very sharp underperformance of late, and that is the reason why they have gone ahead and upgraded their rating on Vedanta from underperform to outperform. Not just that, they've also cut their target price to 230 rupees per share. So as of now, that is the news flow surrounding Vedanta, and that is the reason why we're seeing a very strong uptick on this counter, up nearly 4%.
Okay, that is Vedanta, but let's also listen into what Rakesh Arora, founder at Go India Stocks, believes Vedanta. Where does he see it moving? Listen in.
Vedanta Limited becomes a pure holding company for Hindustan Zinc shares, plus for the new businesses which they might enter. So the holding company discount can actually increase. So currently the street is ascribing around 20% holding company discount to the value of Hindustan Zinc shares held. That can go up. We have seen in cases like Grasim, Bajaj Holdings, JSW Holding, this discount can be anywhere between 40 to 80%. So yeah, that is a big risk, for the shareholders. Once the demerger happens, that Vedanta Limited might get, derated. Dividend will go down. They have around $400 million of, royalty payment coming in every year. And on a sustainable basis, they can take out around $800 million. So 1.2 billion is a cash flow which Vedanta promoters can really take out from Vedanta Limited even after the demerger. That should be okay for, debt servicing from FY26 onwards. The only problem is FY25, and they need to sell some assets there. I won't really recommend from a long-term investment perspective. There could be a short-term bounce because stock has corrected, and, even in worst case, we're expecting around 6% dividend yield. So maybe there's a little downside, but long-term investors should stay away.
All right, moving on. Lisa, let's talk about HeidelbergCement and why this one is in the spotlight today.
Right, Cheryl, it's up around 8%, and that is because of sources through ET is saying that JSW Cement is likely to acquire Heidelberg's material cement business, and they are likely to buy around 13.4 metric tons per annum capacity. So 6.3 metric ton that comes under HeidelbergCement India, while 7.1 that comes under Zuari Cement. And it also augurs well with the JSW Cement strategy, because JSW Cement, they are aiming to become the top 5 cement makers in India, and they are also expecting to increase their capacity from current 19 metric tons per annum to 60 metric tons per annum in the next 5 years. Also, the experts are saying that high competition, underutilization of assets, that's leading to market consolidation. So Heidelberg may eventually opt for a bidding process for their assets, and they are yet to take a final call on their exit strategy. And if this concludes, then it will mark the exit of the second global cement manufacturer after Holcim. They announced their exit in 2022. So that's Heidelberg, and that's why it's trending around. It's trending upwards around 8% in today's session.
Let's move on and talk about Zomato, that has, in terms of the 6 months move, looking at it, it's doubled in the last 6 months, Kunal. On the technicals now, how is Zomato looking like? Should one actually start booking their profits, and maybe, we could see a bit of a decline and consolidation here?
Yeah, I think it's been an exceptional mover. The stock has doubled from levels of 50 seen, I think, last year, June, July 2022, when the stock had fallen very sharply. From there, it's been a very slow, gradual recovery for the first half. But in the last couple of months, the pace has intensified for Zomato. The stock is now trying to meander at the 100 levels, which means it's trying to consolidate at this 100 mark, which should ideally be a good sign. We've seen many of these so-called new age stocks, going into a consolidation for a process of 3 months, 6 months odd. And post the consolidation, we've actually seen these stocks breaking out, making a new swing high for themselves, even on the short to medium term chart. So I would expect the same for a stock like Zomato. So at current levels of 102, 103 mark, looks attractive. My near term targets, which I would probably place or keep for Zomato, would be closer to 120 mark.
Okay, that is the view coming in from Kunal on Zomato. But let's move on, talk about HUL today. We have a brokerage note that is coming from CLSA. They've actually upgraded HUL to a buy from an outperform rating. They've hiked the target price to 3,135 rupees per share, from previous target price of 2,925 rupees per share. They believe the worst is behind in terms of the rural demand. They expect recovery in the second half of the year, and they believe the current pain points maybe will start easing in the medium term for the company. Valuations seem reasonable, below the past 5-year median and average that they've seen. So that's why they're upgrading the stock. Positive commentary could be the catalyst for the stock going forward as well. So on the back of that, let's keep an eye out on HUL, trading with gains of almost 1% as of now.
All right, so that is HUL for you, that's in focus, but let's shift focus on the newest kid on the block, and that definitely has to be JSW Infra. That one actually listed on the bourses today, and it saw a good listing pop as well. While it listed on the bourse, it saw a listing pop of approximately 20.2%, and from there on is only built on gains. 32% uptick coming in for JSW Infra as we speak. Talking about the stock, remember the IPO price, it was priced at around 119 rupees per share. Also on an intraday basis, it's a high. Right now it's actually at the intraday high levels as well. Remember, the analyst had recommended a subscribe for the long term for JSW Infra's IPO, and you can see that actually reflect on the stock price as well. Just after it's listed, this build on to gains, but where is the company headed from here on? Listen out to what the MD and CEO or joint MD and CEO of the company had to say.
Well, we have already laid down some of the proceeds of the IPO for the growth prospects like LPG terminal or the container terminal modernization and upgradation in Mangalore. On top of it, as I said earlier also on the similar channel, that government is coming up with a lot of bidding of the projects, and we'll continue to look at the opportunity. We have been bidding it, and we'll continue to look at this. On top of it, there are a couple of greenfield ports which we are looking at, and going forward, probably, in a couple of months' time, we will know what exactly we are getting into, what are the biddings we are successfully getting over.
I think listing is just the beginning because this now many shareholders will participate, and as I was saying, that this will bring a lot of let's say pressure on the management, or shall I say more ambitious plans can be made now, because India is a hugely growing country, and infrastructure is the one which really is needed for this country to take our country to the 10 trillion and then to the developed economy stage.
Right.
Infrastructure will play a very important role, and that's where JSW Infrastructure will play its role.
It took 13 years from the last listing to this listing. Many of the participants were saying now the listing time should be reduced. Which is the next company you think will be on the block, and will it be reduced now?
No, we have 2-3 companies in the pipeline which are in incubation stage at the moment, like JSW Cement, JSW Paints, and similar couple of other companies. So let's see. It won't be that delayed. It would be much faster because the country is also growing faster.
Right.
So I think we will see next IPOs sooner than this one.
One last question. You mentioned about reducing cost and a huge potential for especially JSW Infrastructure. What should be the strategy for doing the same?
Well, as you make your infrastructure more efficient and transportation cost comes down and volumes can grow up, the cost will come down. India has to bring down its logistics cost, and it can only happen through better infrastructure, better planning, and that is where we believe that JSW Infrastructure will play its role.
That was Sajjan Jindal, the CFO of JSW Group, and obviously, what interesting chat in talking about the infra space that he believes will grow in India. JSW Infra, he's talking about that as well, and we could expect IPOs coming in sooner than versus what we saw for JSW Infra, which took almost 13 years. So surely an interesting word coming in from Sajjan Jindal as well. But let's move on to the next stock, and stock number 10 for today is PCPL, or Philip Carbon as we knew it before. Kunal, PCPL 57% return last 6 months. How much more upside, or maybe one should book profits?
Good time to buy the stock because it's confirmed a breakout today on the daily charts. In fact, the stock has shown some exceptional jump in terms of volumes. Today's volume, I think, is almost at a 1.5 month high. The last the stock had seen such kind of strong volumes was in the fag end of the month of August. From there, the stock actually had moved from 157 to 170 plus. And this could probably be a breakout again for the stock to up its base. So the previous levels of 157 could act as a major support, and the stock can continue to show signs of strength. So looks very attractive. Another mid-cap name which is showing signs of strength as well as a consistent sign of a breakout.
All right, that's the view coming in on PCPL. But Vamakshi, after defense, railway, power, looks like EMS stocks is a buzzword coming in, isn't it?
Well, yes, Cheryl, when we look at the stocks, in fact, a lot of brokerages have actually gone ahead and initiated coverage on all of these counters of late. And in fact, today we have a brokerage note that has come in from Incred, and they have highlighted that India's EMS industry is expected to grow at a CAGR of almost 32% and touch nearly $80 billion by calendar year 2026. They also believe that India could become the most attractive country for EMS. In fact, they have also highlighted that the China Plus One strategy augurs quite well for India in this aspect. Not just that, the government policies are also providing the necessary impetus to all of these counters. So given all of those, they've actually gone ahead and initiated coverage with an ad rating on counters such as Keynes, Avalon Tech, Sigma SGS, Amber Enterprises, PG Electroplast, Signed DLM, Ellen Electronics, Dixon, as well as IQ Lighting. But would like to highlight these three counters, that is Keynes Technology, wherein they have given a target price of 2,800 rupees per share. For Avalon, the target price is nearly 750 rupees per share, while for Sigma, the target price is almost 700 rupees per share. So given that brokerage note that has come in from Incred, we have all of these counters abuzz in the trading session today.
Let's move on and talk about Metro Brands. Lisa, this one is flying away in trade today. I believe it's the second consecutive day of gains after we have a brokerage note from this.
Right, so Prabhudas Leeladhar, they had come out with a note on Metro Brands, and they had initiated a note on the stock with an accumulate rating at a target price of 1,231. But as we can see the share price, it has surpassed the target price as well. The note over the weekend, and they expect the sales to grow at around 20.1% CAGR over the next 3 years, and multiple factors for the huge runway for growth according to Prabhudas Leeladhar. What they say that they have presence in 174 cities, while Bata Tanish they have presence in over 388 and 257 cities. So metro brands have room for scaling up the business going forward, and also their online salience, that is around 8% of their sales, that is also showing a rising trend, and they are also focusing on mid-premium segments while they are acquiring new brands, acquisitions, and they had scaled up in Crocs, which was recently acquired, and they are expecting the same scale up for Fila as well. So on the back of the positive outlook coming in from Prabhudas Leeladhar, metro brands are surging in trade today as well.
All right, moving on, Kunal, GMDC, how is this one looking on the last year's stock that we've actually rarely spoken about, isn't it?
No, in fact, I think closer to 175 odd levels had recommended a buy on GMDC, and that was a big breakout for the stock. The stock had, was on the verge of breaking past above a 7 or 8 year resistance 2014-15 mark for itself. Now the stock is perched at 330 plus levels. Even at current levels, I would believe that the momentum is looking quite charged up and strong for GMDC. For traders who bought at lower levels, I strongly believe that even at current zone, the stock could be held on to. Even if the stock has shown some exceptional returns in the last few months, the volumes, the chunk of price trend, the behavior of indicators, etc., are looking quite strong for GMDC. So that's a hold as well as a buy on dips at current levels as well.
Let's move on and talk about MGL. This one is in focus as well. Now, MGL has cut CNG prices by rupees 3 per kg to rupees 76 per kg. Now, that's the new price that has come in. So, they've cut it by rupees 3, and DPNG prices by rupees 2. And now the new price is at rupees 47. So, on the back of this is going to be with effect from 2nd of October. That was yesterday. So we are seeing that MGL is in focus today over here on the back of this, as well as Jefferies has come out with a note on MGL as well. They've upgraded the stock to a buy from a previous hold rating and given a target price of 1,320 rupees per share from previous target price of 1,100 rupees per share. What they believe that the OEM partnership will accelerate the volume growth for the company, and that's MGL for your Mahanagar Gas, not Mangalam Cement is what we're talking about. We're talking about Mahanagar Gas. I would request producer to change the stock there. And as well as when you look at it, there's a comfortable sourcing with priority for HPHT gas allocation. So keeping an eye out on that one. Margin upside in FY24 is what is expected. Strong margin sustainable on the back of HPHT, and EV risk is manageable for the company. We've seen the stock was buzzing in trade today. And as of now, also MGL is holding on to gain. So let's keep an eye out on MGL. Gas is up 8.2% today in trade, trading at around 1,113 rupees per share.
All right, Mahanagar Gas, definitely another stock to watch out for. Actually, Vinny, given the fact the sharp rally that the stock is seeing, in fact, in a otherwise pretty much weak market. But talking about the market, let me actually mark the recovery that we are actually seeing in the markets at this point in time. Take a look at what Sensex is doing and Nifty as well. We are actually we are trying to pair all those losses right now. And you can see it on your screen. There you go, near the day's highest point coming in for the benchmark indices. So let's wait and watch. Hopefully 2 hours or less than 2 hours of trading session left now, Vinny.
Absolutely, less than 2 hours of trading session left, but surely a slight bit of a recovery and hope coming in the markets. On that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.